Hey everyone, welcome back to Corporate Decoder. Today we're diving into Kezar Life Sciences' latest report, and let me tell you, it's a bit like a roller coaster ride promises excitement but might leave you feeling a little queasy. We'll uncover what's really going on with their key drug and their money situation. This report came out on March 25, 2025. It covers Kezar's financial results for the past year and some important news about one of their drugs. In short, they're talking about their financial health and giving an update on how their drug is performing in testing. Let's jump right into the drug update. Kezar has been testing a drug called zetomipzomib for autoimmune hepatitis, which is a disease where your body attacks your own liver. They just finished a phase 2A trial called Portalaba, which is an early stage of testing in people to see if the drug is safe and seems to work. The report mentions a press release with more details. Basically, they're sharing the main results from that trial. There's also a slide presentation that goes along with this. This presentation probably breaks down the trial results in more detail. Now, before we get into the numbers, it's good to know that Kezar stock is traded on the Nasdaq stock market under the symbol KZR. So these results can affect their stock price. Okay, let's get into the financial results for the year. First thing, Kezar had about $174.6 million in cash equivalents, and marketable securities as of December 31. 2024, that sounds like a lot, but for a drug company trying to develop new medicines, it's important to understand how quickly they are spending that money. The report says they spent $43.6 million on research and development in 2024. Research and development, or R&D, is the money they spend on discovering and testing new drugs. This is a huge part of what a company like Kezar does. They also spent $17.4 million on general and administrative expenses. This includes things like salaries for the executives, office costs, and legal fees. Here's the bottom line. Kezar had a net loss of $54.4 million for the year. A net loss means they spent more money than they made. This is pretty common for biotech companies that are still developing drugs and don't have products on the market to sell yet. The report also talks about something called cash runway. They believe their current cash is enough to fund their operations into the second half of 2026. Cash runway is how long a company can keep running its business before it runs out of money. It's very important for investors to know. Alright, let's circle back to the drug trial because this is super important for Kezar. The Portalaba trial was testing zetomipzomib in patients with autoimmune hepatitis. The company released the results in a press release and a presentation listed as exhibits in the filing. That's where you'll find the detailed data. The report states that the company presented top-line results. Top-line results are the initial main findings. So what's the overall picture here? Kezar is a biotech company that's burning through cash as it tries to develop new drugs. Their financial results show a loss, which isn't unusual for this type of company. The big question mark is whether their drug zetomipzomib will be successful in treating autoimmune hepatitis. The early trial results are important because they could affect whether Kezar can raise more money or partner with a larger company. Now, let's put on our thinking caps and analyze what all this means. From the numbers, Kezar is clearly in the high-risk, high-reward game of drug development. They're spending a lot of money on research, but that's the cost of potentially creating a blockbuster drug. Their cash runway gives them some breathing room, but they'll eventually need to raise more money either through selling stock, taking on debt, or partnering with another company. The Portalaba trial is really crucial for Kezar's future. If the drug shows strong results, it could attract investors and partners. If the results are disappointing, it could be a major setback. It's a make or break situation. One thing that stands out is that Kezar is focusing on autoimmune diseases. This is a growing area of research, but it's also very competitive. Kezar will need to show that their drug is better than existing treatments or other drugs in development. Overall, Kezar is a company with potential, but also with significant risks. Their success depends on their ability to develop and commercialize new drugs. Investors should be aware of the risks and do their homework before investing. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.